The July Consumer Price Index (CPI) report is expected to show the impact of escalating trade tensions on inflation rates in the United States. The data released by the Bureau of Labor Statistics will provide insight into how tariffs imposed on various imported goods are affecting consumer prices. According to economists' forecasts, the CPI is anticipated to rise by 0.3% month over month and 2.9% year over year. This would mark a slight acceleration from June's 2.8% annual rate. The predicted increase is largely attributed to higher costs associated with tariffs on imported goods such as clothing, electronics, and furniture. One key area of focus will be the core CPI, which excludes volatile food and energy prices. Economists expect this measure to rise by 0.3% month over month and 2.1% year over year, also marking a slight acceleration from June's annual rate. This increase is driven primarily by higher costs for housing, medical care, and transportation. A closer look at the data reveals that tariffs on imported goods have contributed significantly to rising prices. For instance, clothing prices have increased by 3.5% over the past year, due in part to a 25% tariff imposed on Chinese made garments. Electronics prices are also expected to rise as manufacturers pass on costs associated with a 10% tariff on certain imported electronics. The impact of tariffs is not limited to specific industries. It has broader implications for consumer spending and economic growth. As prices continue to rise, households may be forced to adjust their budgets, potentially reducing discretionary spending and slowing economic expansion. Some economists argue that the July CPI report will provide insight into the Federal Reserve's decision making process regarding interest rates. With inflation expectations rising, the Fed may consider a more aggressive monetary policy stance to keep price growth in check. However, others caution against making hasty conclusions based on a single data point. The inflation picture is complex and influenced by various factors, including wage growth, labor market conditions, and supply chain disruptions. The Bureau of Labor Statistics will release the July CPI report at 8:30 a.m. ET today, providing an update on the current state of inflation in the United States. As the data becomes available, investors and policymakers will closely scrutinize it to gauge its implications for monetary policy and economic growth.